Hey guys, what's going on? Jeb here, and in today's video I am going to be showing you how Ethereum has a price target of $5,000 based on the inverse head and shoulders pattern that it's in. I'm going to talk a little bit about how Ethereum and Bitcoin are running in tandem, and if Bitcoin's able to have a breakout, then Ethereum will follow, and we might see an all-time high run sooner than you might expect. Before we get started, if you enjoyed today's video, make sure to smash that like button. But without much further ado, guys, let's go ahead and dive right on into it. Alright guys, this is going to be a short video. It's a very simple concept. There is an inverse head and shoulders pattern showing up here on Bitcoin, on Ethereum on the daily chart. You can see the left shoulder here formed on this inverse head and shoulders pattern in early January. The head formed in late January, and the right shoulder has basically just finished forming. We have a shoulder line that is right here, connecting about $3,000 all the way down to $2,850, and then a neckline connecting $3,400 all the way down to $3,250. If we go ahead and draw our price target here, extrapolating from $2,200 all the way up to $3,500, then that gives us a price target of $5,000. So the question on the table is Ethereum about to go to $5,000? And if so, how would it do that? Well, the first thing I want you to understand is that Ethereum and Bitcoin move together. When Bitcoin is moving into a large rally, oftentimes Ethereum will move much faster than Bitcoin, outpace it, and rally even farther. So if we saw Bitcoin rallying up to $55,000, $60,000, then a $5,000 Ethereum would make a lot of sense. But if Bitcoin fails to continue a rally here as a result of the Russia-Ukraine news or as a result of FUD coming out of the Federal Reserve potentially raising interest rates, then what we're going to see happen is that Ethereum is going to have a very hard time going into a rally. What I need to see Ethereum do is maintain above this downtrending level of support that's basically sitting around $2,800. This level needs to hold, because if it does, then the inverse head and shoulders pattern is still in play. What I want to see happen here, and is very, very simple, is that if Bitcoin is able to break bullish above $45,000, then you're likely going to see Ethereum break bullish above its neckline right here, and then we will have one major level of resistance at $3,400, and then from there we'll rally up to $4,000. From there we'll rally up to $5,000. That would probably take several months. As I said, much of it is going to come down to geopolitical fundamentals happening in the stock market and around the world as a result of some of the conflicts that are currently potentially brewing. The one thing I do want to remind you of, I've said this many times, but it's still true, out here on the weekly chart and on the 3-daily chart, we can see that there is bullish RSI and bullish MACD divergence having to do with the fact that RSI and MACD have set lower lows recently, but the but the price action has set higher lows. That gives us a long-term technical confirmation that we should be going into an uptrend. On top of that, we can see that RSI has broken above its 14 interval moving average, currently sitting at 44, hasn't even broke up into the bullish control zone above 50 just yet, but if it does, that's going to be great. And then we're looking at a bullish MACD cross happening right now, literally just in the last couple of days on Ethereum. The point is, long-term fundamentals are looking very, very strong right now, even if short-term technicals might be giving us a reason to pause. So what's the point here and what's going to happen? I personally think that we're in a no-trade zone right now. I think you need to be careful about trading Bitcoin or Ethereum because the technicals and fundamentals say, yeah, we should be going into an uptrend. The fundamentals and the FUD and the market sentiment say, yeah, but let's pump the brakes because people aren't confident enough just yet. It's really hard to tell which faction is going to win. The technicals and the fundamentals and the on-chain that say Bitcoin should moonshot, or the retail and institutional investors in the traditional markets that are too fearful to jump into crypto. What we need to see happen is that we need to see a period of time where there's not a bunch of FUD, where there's not a bunch of fear, uncertainty, and doubt, and that people are able to buy into Bitcoin confidently, see Bitcoin and Ethereum break levels such as $52,000 on Bitcoin, $3,400 up to $4,000 on Ethereum, and then we will start to see the dominoes fall. And if there is fear, uncertainty, and doubt at that point, then people would see Bitcoin and Ethereum as a hedge against something like the US dollar. Right now, because Bitcoin and Ethereum are down 30 to 40% from all-time high, people are seeing them as a more risky asset than the US dollar. But the good news is the trade winds are changing as we see 7.5% CPI data come out for inflation, as we see the undermining of the US dollar from what the Federal Reserve is doing with quantitative easing and remarkably low interest rates. People are slowly but surely starting to realize that Bitcoin and cryptocurrency are the one and only solution to the economic catastrophe that's going to be coming in the next 15 to 20 years if we continue down the same road of economic policy and monetary policy that we've been on ever since the early 70s when we initially went off the gold standard with the breaking up of the Bretton Woods Agreement. All of this to say, if we see the next 3 months as calm, which we're probably not going to see, then Bitcoin and Ethereum will probably start rallying back up to all-time high. At the moment, though, neither one of them seem to be very confident. I think it's going to be a little bit harder than I would have said a week ago for these markets to go into rallies, break above $3,400 on ETH, and break up above $46,000 on Bitcoin. But I'd love to hear your thoughts in the comment section down below. Are we about to see a major rally resulting from people turning away from the US dollar, moving towards cryptocurrencies because they're scared of traditional markets? Or is that fear, uncertainty, and doubt surrounding Federal Reserve policy around interest rates and QE and the Russian-Ukraine border crisis, is that going to drive so much FUD that people are not going to want to invest in Bitcoin, and they'd rather spend their money in and keep their money in the US dollar or in real estate and stocks and bonds? Love to hear your thoughts on that in the comment section down below. If you enjoyed today's video, make sure you hit that like button, subscribe to the channel, and make sure to follow us on our social media at CryptoJeb over on Instagram and TikTok, and at CryptoJebOfficial, where we post daily content and updates about the broader cryptocurrency markets. Before I go, though, guys, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Hey, you made it to the end of the video. If you enjoyed this video, you should definitely consider subscribing, because we're trying to help you become financially free in these cryptocurrency markets. And also, consider following us on Twitter at CryptoJeb for more updates on the price of Bitcoin and cryptocurrencies. Peace.